I think it will reiterate it, but I think it will also underline that perhaps not as dovish as once feared, in the sense that it's not about when they're going to raise rates, it's really the trajectory. And the fact is that the market seems to be looking 2 or 3 years out, thinking the Fed funds rate is more like 125 basis points, much less than it was the last time that we raised rates back in 2004 through 2006. So I think the market's just getting calm. They're able to basically interpret this hawkish as not a surprise, but something more as a tailwind to the equity market in general.
How do you think the market will respond if we do see the Fed raising rates in December? Do you think it will be viewed as a positive and we could see this upward momentum continuing?
Yeah, I mean, sure. I do think that if they do not raise rates, that would be an enormous headwind to the equity market. I don't think that we're in the mood to take bad news, making it good news like it has been for the past 3 to 5 years. At this point, with the hint of raising rates, with anything else happening in the economy to keep that from happening, I think that would be a major, major headwind. But that said, I don't think them raising rates is going to lift the market or lower the market. I think right now it's priced in, and the equity market is looking for more confidence-bearing data with regard to industrial production, retail sales, PMIs, et cetera. I mean, make no mistake about it, raising rates or not raising them does matter, but I think it's priced into the equity market, and the equity market's looking at other things right now.
Sure. We speak there of that strong US dollar, and that, though, is certainly weighing on commodities at the moment, isn't it? And you actually note that you believe that bulk commodities are becoming a bit of a play on oil. So why is that, Larry?
You know, I think they have for a while, but, you know, they've gotten drubbed so badly in 2015. We have to go back and think that, yeah, there's an oversupply problem with a lot of the bulks, but the fact of the matter is that 30 to 40% of their price is in the cost curve of oil. And so as oil's cost curve begins to go higher, and I believe it'll continually go higher slowly but surely, I do think we'll see a very interesting market for the bulks. I mean, I don't think they're going to snap back given how much they've gone down this year, but I do think we'll see some sturdiness in that market.
What's your view on those global oil markets, Larry? Do you expect that they will remain oversupplied for quite some time?
Said this all along that I think they're going to stay oversupplied much longer than the market believes that it can. That said, I do think that oversupply will start to dwindle with inventory overhang in the middle of 2016. And I think the market might look the other way for that for a while, being so used to oversupply. But I think by the end of 2016, we could easily see Brent up around $70 a barrel.
What about your view on base metals? I mean, they still look like they are further ahead in the cycle, though, and they do seem to be in better shape than some of their peers.
Yeah, I do. I think they are. I mean, especially when you look at something like zinc, nickel, or copper. I mean, you have these raw constraints going to start becoming a big issue on the supply side. This is something that people have kind of fallen asleep on, and I do believe we're going to see a really robust rally, especially in the three I just mentioned in 2016.
And of course, overnight, just recently seeing a bit of pressure there, copper touching those 6-year lows. So I guess still a little bit of concern in that area. Larry, I just wanted to get your thoughts, I guess, going forward. And you mentioned it earlier. I mean, the Fed's still very much in focus at the moment. But you also mentioned that you believe the market will start turning its attention to other things. So what will that likely be? I mean, what's the next focus for markets?
Yeah, you know, I think that's hard to answer, except that I believe one of the biggest overhangs is productivity or lack thereof in the U.S. economy. And even though our earnings have been okay, not great, there is a product overhang in our market, and it's very, very reassuring to see factory orders on a positive side. But I think that could be the catalyst, followed very closely by emerging markets. We know that they've shown some real stability last month, but it's still very fragile. Also, we have to look at Europe. I mean, that's another overhang. We're seeing unemployment rates drop there, consumer confidence going up, but they're in that mode that we were in 3 or 4 years ago. So can they do what the U.S. did and just climb out of this mess?